Christian Easterday. I'm the CEO and Managing Director of Hot Chile. We're one of the preeminent large-scale copper developers of the world, holding the Costa Fuego project on the Chilean coastline, advancing that through to a development decision in the next couple of years, which makes Costa Fuego and Hot Chile one of the top 5 large-scale copper developers outside of the majors.
Christian, good to see you here. Welcome to sunny shores. A bit grey as ever. Let me find us. You're here at LME Week. What's the purpose of being here?
We're really interacting with a lot of the stakeholders on the concentrate side of the market and building relationships, which we've been building for a number of years now on that side.
Right.
Preparing to have the right people around us when we're looking to sell a lot of valuable concentrate into the market.
Right. You want to see them. Do they want to see you? And if so, why?
Yeah, look, we're obviously got a lot of interest when a market for concentrate is so tight as it is at the moment. $0 TCRCs going on, so it's an interesting space. The traders seem to make a lot of money when there is volatility, so there seems to be quite a good spirit this year. I'd say there's a lot of interest in Hot Chile. Firstly, as I said in my introduction, there are only 5 projects that are scaled at 100,000 tonnes per annum of fine copper production globally, outside of the controller majors, so the independent projects. And there are not many of those that are near term. So what we have is a project that is meaningful and near term. And importantly for the traders, we're sitting now probably inside their 5-year planning window on where the concentrates are going to feed their refineries.
Right, and of course you've got Glencore already on board.
Correct, yeah,
right.
Exactly.
So how do they work? Do they play nice with the other boys in the playground?
Look, yeah, certainly. Glencore is obviously the largest trader at LME, largest trader globally of copper concentrates. Great to have them in our corner on the benchmark component of what we anticipate selling here. So, they have a deal for 60% of our offtake at benchmark terms, but only on the first 8 years. Okay. And really importantly for Hot Chile, you said, do they want to see you? Yes, when you're holding 160,000 tonnes of potential annual concentrate volume, uncommitted, with no arsenic, and sitting staged for production to hit the market in late 28. That's very meaningful for this type of crowd.
Okay, so you've got the scale there. If I do me a favour, can you kind of run? I know the PFS is coming out, but can you give us the PEA numbers just for people new to the story, so I can take it on from there? Yeah,
sure. Well, what we're holding is something we've been building for 14 years. You hear these 17, 19-year timeframes to build these things. They're very real because of things such as permitting. But by and large, because of that 14-year journey, we're well ahead of most of our peers with our permitting situation. We're in fact readying ourselves to submit our environmental impact assessment mid next year. That's been 10 years of lead time working on that. So we're feeling pretty confident about its submission. It'll be the last permit we require to get our mining permit to develop Costa Fuego. So really, I guess, on the permitting side, combined with the low elevation of the project, the fact that the PEA is showing a project putting out such a large amount of metal, 95,000 tonnes annually of copper, 50,000 ounces of gold annually, 16-year mine life, pre-feasibility coming out in the next few months, that is probably going to lift that mine life, but by and large keep the shape of what we've been talking about here, which is a large-scale project that is effectively half price to build. It's $1 billion to build. If we were in the high Andes and we required fresh water or desalinated water to process with, which we don't, then we would be talking about a $2 billion project to put out that kind of metal production. So we're naturally advantaged in that we have this very executable project down on the coastline that's half price to build. And very near term because of our permitting advance.
Right, which helps considering some of the grades we're talking about. There's a lot of variables which affect margin and same.
Correct.
Sure, I'll let you talk to that in a second. But just on the PA, we're talking about 21% IRR at $1,800 gold, is that gold equivalent number?
1750 on the gold. We used in the assumption $3.85 on the copper.
So today's price, what does NPV look like?
Consensus is just continuing to increase, which is very positive for the medium term in copper pricing. But we're now at $4.21 per pound out of 28 bank consensus that I just saw from CIBC the other day. So we're certainly going to be putting a pre-feasibility out into a higher metal price consensus environment, both gold and copper, which is positive. But I think that what we saw in the pre-feasibility was a very low risk project, the lowest capital intensity project out of the big projects coming, and there's not many of them, as I've said. And I think that probably a lot of those things will play out in the pre-feasibility. We're not looking at seeing a lot of variation to how we shaped it in the preliminary economic assessment.
So that's before year end, which we're aiming for, are we, for the PFS?
Yeah, for the end of the year is where most of those activity streams are all forecast to be complete, and we're on track. We're looking good.
It'll be interesting. Like a 460 copper at the moment, and so it's down at 2,700 gold. It's pretty interesting times. Long may it hold. But we'll see.
Yeah, let's not jinx it. Yeah,
that's good.
I don't like to look at the price when it goes up nor goes down, but look, it's inevitably showing a very nice uptrend, and but as I noted, I think we talked about last time. I expect that this cycle is very different, and volatility is going to be a feature.
Right.
Don't be surprised if we see more highs coupled with more steep lows as we see through this first couple of years, where the market is fairly in balance, only because of weak demand.
Yeah. Again, I'll come on supply and demand in a second. Just sticking with you and your project at hand. Okay, PEA done, PFS on the way. One of the things that have been, I guess, very prevalent in the news this last 12 months, say, have been some monumental blow-ups on economic studies. Actually, the build phase, the post-build phase, and into production. Things have gone. We've got great big examples across the globe of things going horribly wrong. Talk to me about the type of measures that you're taking to prevent and minimize and mitigate risk.
Sure. Firstly, it's always good when you talk about these things to actually break that down, like who is experiencing those problems, which projects, where are they located, jurisdictional, and a lot of it for the copper sector, unfortunately, is how high are you developing that asset. And if we look at a lot of the really, really bad examples in the industry, there seems to be a lot of them that are high elevation projects, typically in the Andean belt. They cost more, both at an operating and a capital cost. They all carry very big burdens of capital on water infrastructure now. And the development timeframes are often outwards of 4 years. And couple that with capital estimates that might start at $4 billion, in the case of Cabrera Blanca and several examples in the high Andes, those capitals numbers are blowing out, 100%. And so there's been a number of bad experiences, but when we look at projects that are down on the coastline in the copper space in Chile, when we think about projects that are being delivered right now in Manto Verde, having a fantastic experience, the Capstone guys there, and when I say fantastic, we're not having a bad experience. So their capital is on track. They've just announced first production, and that's great for us because they're almost a lookalike project in terms of economics to what we're contemplating developing with Costa Fuego.
Because they've got literally a lot of the same variables.
Exactly, that low elevation, they don't have that water situation and infrastructure. The grade's slightly better, but their throughput is a lot lower.
Okay.
Exactly, yep. So what we've seen there, we've also seen up in Peru with Mina Justa was another saltwater project developed down on the coastline, similar scale, similar experience. So firstly, it's about the project in terms of what natural risk you're going to face. Are we going to face that kind of operating and capital pressure? So without that, then it's about really the engineering of the project. At 1 billion tonnes resource base now, we have the resource base to underpin that mine life, 16 years in the PEA, probably going higher into the pre-feasibility, and no doubt finishing in the sort of low 20-year mine life profile by the time we get to the bankable, and that's a lot to do with the economics of this thing as we further study it, as well as further growth coming in that Hot Chili is planning. But what we see with the study is we're having a very big focus on mitigating any of the inflationary impacts on our operating and capital cost schedule, rather. And so we're going after really interesting things such as recovery issues that we've always felt that we could get more out of, particularly some of our credits. So we're working hard on that and seeing some good movement there. But also, outside of the free kick that we're going to get, no doubt, with long-term consensus inputs on pricing, on copper price at $4.20 and gold probably closer to $2,000 an ounce now US. We're also seeing impacts of our mine optimizations. Our PEA was run at $3.30 mine optimizations, and we used $3.85 a pound copper for our financial assumptions. And obviously moving to a higher consensus price means that we're optimizing our mine schedules.
Yeah.
More at $3.50 now. Yeah. And so that is putting on that additional mine life
and your
and giving a benefit there.
Assumptions around your costs were sort of at like $1 what?
$1.33 C1.
Right.
Total cash cost at around $1.43.
Okay.
All in at around $1.80. And then the total cost, is somewhere sitting around the $2.20 US mark.
Got it. Okay.
So certainly we're one of those few projects that's sitting in the low cash cost, low capital intensity part of the matrix.
So people can take that data and add some of the following data, which is it's going to be really important. The cost of your capital for that capex is going to be critical to you. And how are you? I know the PFS is coming out, but the economics will be a little bit firmer. But how are you envisaging the kind of build up and build out of any potential plant, given what you see in front of you today?
Look, I think we're contemplating a 2-year construction timeframe, 18-month production base commencement at over the 2-year construction phase. So, conceivably, with our best timelines at the moment, early production no earlier than late 2028.
Okay.
Is what we foresee in the schedule.
And by first production, you don't mean like nameplate capacity. You mean it's that's
turning on that first production, exactly.
Right. Okay. And the ramp up period would be
6 month ramp up.
6 month, right?
Yeah,
okay.
It actually feeds into about 9 months on our ramp up schedule. Yeah. But 6 months is where you would see. You would probably name first production to being close to nameplate.
Where does that
the ramp up starts before that, obviously.
Yeah. Where does that put you in terms of the conversations you're having around here in London during LME week with whether it be traders, and traders will, they'll hedge the bets. They'll get bits of paper in front of everyone because they want the optionality there. But people like Glencore, they put their money where their mouth is, and obviously you talked about the limits of that current structure of that deal. But for others looking in, you want that kind of competitive tension, you want other people involved, you want to make sure the access to capital is good and the cost of capital is the best it can be. How do they view a company like yours at this stage in relation to what other options are out there on the supply side? Doesn't seem to be a lot coming through. No,
I just literally stepped out of a lunch with my counterparts at Glencore. So we spoke about a number of the things that are being talked about at LME, one of those being that. And, again, even with our colleagues in the investment banking community, there are just not a lot of processes going on because there are not a lot of products available that juniors or independents are holding that are both meaningful to a major or near term enough to be where a major miner is sitting there weighing off the age-old discussion, brownfields versus greenfields, and low capital intensity brownfields versus high capital intensity greenfields propositions for growth. Tech talking about whether organic growth is the way to go over M&A. So all of these kind of discussions are being had. But now we're starting to approach this inflection point where a lot of the greenfield projects are starting to become lower capital intensity options for new supply. So I think that that's, very well aware, but I think that Glencore and others in that space, they are aware how tight it is on in terms of new productions, new projects that are available.
Yeah, and how are they viewing that supply? Because if I look at some of the...
And you've seen that with BHP's move into a developer cluster just above us with Philo and Jose Maria.
Up in the mountains on the border. Yeah, we've seen it. And I understand what you're suggesting implications could be there, but, big balance sheet.
I don't want to say it, Matt.
No, you couldn't possibly. But big balance sheet, maybe that kind of gets you through those sorts of things. But in terms of that supply timeline, if I go to some of the Woodmacs of this world and I'm reading their reports, etc., I have to admit, as an ex-banker, I'm somewhat discounting their timeline and the amount of supply coming into market according to them, because they're generally, I'm not targeting them specifically, they all do it in all metals. Their view of the amount of supply coming into market and the times that they suggested, I think, are somewhat optimistic, and that's kind of good news.
I would go so far as to say dystopic.
Yeah.
I saw a graph which was a fantastic piece from BMO in their most recent up-to-date research on the copper space.
Yeah.
And they showed the forecasts by some of those names. Obviously, forecasters.
Yeah.
We shouldn't kick them too hard. It's a terrible industry. You don't want to be betting on people getting it right there a lot. But since 2014, so the last 10 years, they've overlain the progression of supply forecast, and then actual forecast plotted. There is a huge gap between what has been forecast every year to come and what has actually come.
Yeah.
And so, that's something that when you look at the possible and probable projects, we take our own view when we look at those lists that compiled by Woodmac and CRU, but I would say that they are perennially optimistic about supply that has never ever materialised.
Yeah. And like I say, I don't want to pick on any of them, and it's not just a copper thing. It's a nickel thing. It's a uranium thing. It's you name it. It's because it's unquestioning. Anyway, that's fantastic for those prospective for producers and prospective producers. Good news, hopefully, in terms of metal price and therefore margin and all that kind of good stuff. But it still doesn't answer the question of where the hell's the stuff come from. Let's say, and what does that do in terms of the available cash then? It obviously, presumably, makes conversations a little bit easier. Any insight?
Yeah, I think it does. Certainly, Hot Chili's been able to fund itself very well this year in a really well-timed capital raising, which means we're sitting here with $30 million and doing what we need to do to get the project pushed forward at a rate of knots to ensure that we are first in line to finance a 100,000 tonne per annum project. So that is our game plan that we've got the accelerator pedal pushed down on. I think I've used that one before a few times, but our focus is the delivery of that pre-feasibility and the commencement of the bankable next year, and getting that environmental impact assessment ready, because it puts us in a very unique space in the next 2.5 years to be sitting with a very, very rare asset at that scale.
Right.
And I think that where the copper price is going, outside of the volatility that no doubt we will see, it's looking very promising for positioning something like that.
Okay, and I do want to get onto EIA and water in a second, but just back on the asset, we're moving from PEA to PFS. In terms of that $30 million, how much of that is being allocated to just either bringing more certainty into the ore body itself, and the amount of pounds that you have got could include in that PFS?
Yeah, I mean, a lot of that work has been done, which is great. Now it's just really most of the desktop stuff.
Right, okay.
So a lot of engineers, a lot of metallurgists, financial modelers, etc., working on it.
Okay.
And environmental teams that are working on the environmental impact assessment. So we've got a lot of people working on this at the moment.
Right.
not making a lot of noise in the market.
Right.
Certainly the stuff that is unfortunately maybe boring to the market, but is critical to be able to transition out of this trough of the Lassonde curve and back onto the slope of value accretion.
Okay. So speak, and obviously with the PFS so close to being produced, I guess the drilling would have stopped. Between the PFS and the DFS or PFS, whatever you want to call it, will you be looking to add to the scale or more on the certainty? And if so, what's the timing of that?
No, we've looked the scale decision for now, and that's about going because we have enough to go and not wanting to miss the window. If you continually put that off by continually drilling and let's go back to the drawing board. Have we got this scale? And doing that, you'll never get there. So for us, it's really important to deliver on that timeline, to be at the financing table in early 27, late 26, with a final mine approval, with a final bankable study complete, and hopefully a very, very systematic, solution to how we're going to fund the equity side of this project. That's what we're focusing on.
Okay.
We do have growth funds set aside, as you're trying to ask about, Matt. We have quite a significant amount from the last capital raising put aside for growth. We have stated this several times. We have a 30,000 metre program that is funded. But we don't have the drill rigs turning, and for very good reasons. We have a certain amount of time to add low risk growth in before we get to the end of the bankable for that final mine life. We're not in the business of going out and chasing exploration. 2%, maybe at best 5% probability of success. It's not good decision making with shareholder funds.
Okay, so it's big enough, and let's wrap it up in a bow, and we've got the optionality over here. Great. Let's talk about EIA, and the big part of that. One is water, not just because of the environmental component, but also the financial possibilities off the back of that. So how have things moved on? You got an 80-20 relationship there.
Yeah, that's right. So I'm just finishing on that growth to round that out where I was going with it. Obviously, the last of the consolidation acquisitions are what we're focusing on the commercial front there.
Okay.
If they're able to be taken out, then we will deploy that growth drilling, but we'll be very, very choosy about where we put it.
Okay.
So that's coming. But as you're asking about the water, this has become something that's just really gained in momentum for the company. It was an idea 18 months ago because people were coming and offering large check sizes to build our water and buy our licenses, and moving on towards large mining companies wanting to talk about water synergy because they didn't have a water license in the area. So earlier in the year we completed that conceptual study. We realised that we weren't just holding the ability to supply salt water to our project, we were potentially holding the ability to supply desalinated water to an entire region.
Right.
6 major undeveloped projects, agro-industrial, commercial, off-takers sitting within the valley.
Yeah.
And so we've now taken all of those assets, put it into a new subsidiary that we own 80% in. Mm-hmm. That's the easement corridors, that's the existing maritime concession to take water out of the ocean, the second maritime concession, which will also allow for desalination, which is an approval that's around about 18 months away, as well as the coastal land access. So all of those assets have gone into Wasco Water. We've been talking with the major infrastructure partners that invest in this space and developing relationships there. And we've also been talking with large potential off-takers in the region about what their desalination requirements would be. And so we now have a pre-feasibility that is being run in parallel with our copper study. That pre-feasibility is looking at the supply of salt water to Costa Fuego in 2028. Very substantial sized saltwater supply business towards 900 litres per second on a 20-year plus project. And then we're looking at the ability in 2030 to be able to layer on a potential potential desalinated supply business.
Okay.
And the reason why this opportunity even exists is because 12 years ago, when we got good metallurgy on our first deposit that said we could process with salt water, we breathed a sigh of relief, and we also recognised that Chile was only going one way in the Atacama. Now the people that sold their water rights to the mining companies were now suing the mining companies. Copiapó suddenly didn't have a river running. And our Vice President, Jose Ignacio, and myself, we made that decision to make a maritime application. At the time, no one had made a maritime application for many years and didn't understand even the time frame or the process that it would take to get one approved. And even in the last decade, we're one of the only companies in Chile that has been awarded a maritime concession. So people say, geez, weren't you very good at it? Why did it take 8 years to get approval? That is the regulatory process in Chile. They are talking about trying to streamline it, but at the moment that is the way it is. There's a lot of stakeholders that need to be engaged, consultation periods, and a lot of backwards and forwards with the company over that time.
Right.
And the fact that it's also run by the Chilean Navy.
So can I be rather crude and get to the point where I work out how valuable this is? You've got the options are you take said SpinCo and make it public, in which case your shareholders will be the beneficiaries. You can go private, in which case it becomes an annuity stream for your shareholder, your company and your shareholders presumably, or that there's a major capital event, in which case you flog it and lots of associated deals to make sure you've got water, etc. So there's lots of options there for you. But did those come close to allowing you to finance the capex and possible build out of your own project?
That's right.
Can you talk to that?
And we are thinking about that option C. Use the water business, sell it down to a strategic major investor in the water industry. And that will be a large part of our equity side.
Right, with some bells and whistles associated with that.
Potentially, I mean, what we might be able to retain, whether it's a royalty stream or whether it's a 10% or 20% retained interest in the company. At the moment, we are thinking about it as a monetization strategic asset that we can sell down.
Right.
And we talk a lot about, and it was fantastic timing, the deal that Antofagasta did on their Centinela project. And a lot of people are a bit confused, and they are looking at that transaction, trying to understand, well, what does that mean for the value of this water asset for Chile? Antofagasta took their water rights, they sold them for $600 million to a consortium that is building their water expansion of $380 million to supply water. Antofagasta supplied them with a 20-year offtake agreement to supply water
the company,
to the mine.
Not the city, right?
Exactly, the company.
Okay.
So they've almost created $1 billion of value out of their water assets just there. So we are thinking about it like that. That's certainly the interest we're getting. Right. And some people say, well, that's actually not really the real story there. You couldn't get $600 million because it involved the existing water pipeline and saltwater pipeline out to Centinela's mine, and yes, it did. But if you've gone through the learning experiences we're going through in the water industry, you also understand the effective life left on those assets. That's assets that were built for Centinela nearly 15 years ago. There's not a lot of effective life on the existing water pipeline. They basically they bought the ability to build the new pipeline alongside to supply all the future waters to Centinela. That's what they've done.
Got it. Okay.
Because there's not a lot of effective life left on that existing infrastructure.
Right.
So that's $600 million. Probably the majority of that is the value that they attributed to having the right to actually enter that business with Antofagasta.
And remind me of the capex number you'd be looking for there.
Our water infrastructure is around $140 million of capital, and that is what we can now outsource out of our build cost. But we also can derive probably a fairly large purchase price for our 80% interest in Huasco Water.
And on the copper project?
So on the copper project, we have 100%. We have an embedded partner there that their interest might be somewhere in the order of 5 to 10%. But overall, we have a copper asset that's going to have a pre-feasibility at the end of the year, a water asset that's going to have a pre-feasibility not far after, and both of those project values are significantly large.
But what's the capex on the copper project?
On the copper project, $1 billion US.
Okay. So in terms of the sorts of numbers you're mentioning with regards to the water, 600 or whatever. So basically, there's a big chunk, if not all of the equity, can be dealt with, right?
Correct.
Yeah. And debt, how do debt providers view something like a 4-year effective to production deadline in terms of that kind of holiday interest, or however you tend to deal with it? You must have been speaking, so we're seeing what's going on in the market this week.
We are talking to the debt side, not as much at the moment. Those discussions
early.
will exactly.
But
Those discussions will start to gain momentum. I imagine probably mid next year to late next year as we start our financing run up. And then it'll be about bringing that syndication of like-minded banks on the debt side, and then stacking our equity options. But our equity options, I sort of, have marveled at, there's very few companies that are in the junior space that are talking about big projects that we're building. And I just spoke with my colleagues at Glencore, and, he said, countless juniors are there. They're worth 10, they're worth $30 million. In our case, we're obviously worth a little bit more. But they're talking about building a $500 million project or a $200 million project, and they just sort of roll their eyes. So for Hot Chili to say, well, we've got the standard levers. We haven't touched streaming. We've got a lot of precious metals being produced out of this project, 50,000 ounces of gold a year and some silver. So we've got the ability to put together part of the check size there. We very, very prudently kept 40% of our offtake uncommitted outside of the Glencore arrangement, and that's getting a significant amount of interest. I think that Japanese investment and Asian investment directly into new copper projects will be a growing theme over the next 5 to 10 years. I think that is very much coming back into the industry. So we certainly have those things to contemplate. But most importantly, we have this entire strategic asset, 80% of it, that we're able to cut loose, sell down at the right time to provide, as you say, probably a very large part of that equity piece. And as we develop the business more over the next 2.5 years in front of financing, it's our job now to not just pair the licenses with our own offtake agreement to get the water business up and begun. It's our, within our reach to procure other off-takers within the region to then build the opportunity for a very large-scale desalination business, because that is certainly worth a lot of money. So to have the ability to first provide salt water for the infrastructure partner to an off-taker that's already there in Hot Chili, and then that establishes the infrastructure. It's a very elegant solution then to roll on top with a desal provision following that. So it's a really, really interesting aspect of our story that you don't hear of a lot.
Right. Well, I'm looking forward to these PFSs coming out. It gives a better sense of what the economics could look like, because the market is obviously evolving and changing, and let's see what prices everyone's using at that point. Thank you very much for your time. Appreciate it.
Excellent.